if the United States has all of the gold that we've claimed to have since the last audit in the 1950s, if we in fact do have all that gold and you divide it into $35 trillion of debt, if we had to pay our debt off with the supposed gold that we have, and I highly doubt we have all that, but assuming we do, the number would have to be over $125,000 an ounce. Now, as far as a trade currency, I'd have to see exactly what the global trade is minus the West, but it wouldn't be completely minus the West, because if the West is trading with BRICS nations, then one would think that the Western nations would have to have these units in order to settle the trade. So they're going to have to go out, dump dollars, dump euros, dump yen, dump British pounds to create the capital to purchase these units. And of course, that's basically a bid directly underneath gold, because, probably the easiest way to purchase a unit would be with gold itself. I mean, how are you going to do it with 50, the other 60%, if it's going to be 50 different currencies? There's no way. That'd be like trying to herd cats. So you just go directly to the source, you buy gold, and basically what you've done is you've bought yourself, representative units, if you will.
Let's go back to what you said about silver. You were talking about the overhead resistance. Many people in these communities are talking about that $50 mark from the last all-time high. You're suggesting the overhead resistance is much lower than that, that perhaps maybe the weak hands have already been washed out here, given the time span between that last high. Explain that to the audience members. What do you mean by that?
Well, the last high was 50. And in between that move, I think we ran from $15 or $17 up to $50 in about a 6-month period of time in late 2010, first half of 2011. And, there was choppiness. It would, and I don't even know if these numbers are real or not. I'd have to actually look at a chart. But, we ran up to 20, 25, pulled back a little bit, ran up to 30, 35, pulled back a little bit, chopped at 40, and then we spiked up to 50. So on the way up, there were resistance levels. And on the way down, we bounced off of 44, we bounced off of 40, bounced off of 32 and 30, crashed through 30. Normally, those would be points to look at for support and resistance, but that's 11, 12 years ago, 13 years ago. So those are long gone, long forgotten. And I mean, the sellers at whatever level or the buyers at whatever level, they're all gone. So those are meaningless. Right. They're meaningless numbers. So, I mean, in reality, there's nothing to stop silver from going. We break through 32.50. There's nothing to stop it from going immediately to $50. Do I think it's going to happen, immediately? No, I think in a more normal market frame, it probably should take, 3 months, 6 months, and that would be a rip snorting bull market. But at some point in time, we're going to have a failure to deliver. We're going to have a massive short covering squeeze. And it very well could turn out that it works out like a light switch, where $50 is meaningless and it blows right through $50 like it wasn't even there.
Goes to no offer.
Right. It goes. Well, my partner Jim Sinclair used to talk about the scenario where you could see gold $50,000 bid and COMEX contracts for gold $10 offered and no bids. And the reasoning behind that is his question was, what is the value of a contract that cannot perform? And a failure to delivery is not performance. Right. So basically, you could have the contracts go to zero, and you could have gold basically unobtainable.
JC, now would be the time to show that chart I just sent you and to help really underscore what Billy was just saying. If you look at that chart, that's one of the slides from a presentation I'm giving this week. The red line represents the big 4 banks on COMEX that are short. The green line represents the top big 8 bullion banks. If you notice that there are 8 banks right now short the largest concentrated short position on any commodity ever traded in the history of the COMEX market in silver. Now, why the hell would that happen? Of course, followed number 2, platinum, gold, palladium. So, you know, the 4 precious metals that are monetary metals as much as anything are being suppressed by 8 banks to a degree that the COMEX market has never, ever, ever seen. And when you talk about the CFTC is supposed to protect against collusion, against price fixing, well, they're really doing a shitty job, because this is exactly what they're supposed to protect against. Silver is a small market. It is minuscule, the size of most of these other markets. And look at the concentrated short position of 4 and 8 big banks that are holding the price down. And what beats them at this game are countries like India, who are standing for delivery and took almost 700 million ounces from the West in the last 2.5 years. And then they just, because they have this deal with United Arab Emirates where they don't have to pay duties. Last year in 2023, they did $2.2 million worth of silver imports from January to April. United Arab Emirates, India did from them. And now, over the same time frame this year, 1.44 billion worth of silver imported, a 654-fold increase. They're buying silver wherever they can. And they're using the suppression of these idiots right here, these 8 banks who are holding the price down, to reposition. And that is how they win. No one ever stood for delivery. It is how you win, because all of this selling right there, you're talking way, way more silver that is in contract form than they have the ability to deliver if called to the carpet. And this is how it all ends poorly. And when you see that chart, it should really explain a lot of things.
Bill, you're an authorized broker for Miles Franklin. What are you hearing right now in the last couple of weeks talking to clients? Are we seeing market jitters right now? I know a couple of years ago we had a big panic to own moment. You guys' phones were off the hook. It kind of died down with the premiums the last couple of months. But just now in the last couple of weeks, as we're seeing this huge turnaround here happening on the geopolitical front, what are you hearing? What are people telling you?
Yeah, up until a couple of weeks ago, I think, yes, it had slowed down somewhat. We're getting, and Andy can confirm this or deny it, but I think what we're seeing are less orders, but bigger orders. The phones aren't ringing as much. I'm not getting as many emails. And I do think that North America as a whole, the demand is down, and that's the reason that you're seeing premiums back to where they were before COVID and basically normalized. And I do want to mention that chart that Andy had sent you and put up. You'll notice that the top 4 most heavily shorted are gold, silver, platinum, palladium. Platinum and palladium, not really precious metals, not really money. They're more industrial. Silver's a hybrid; it's industrial and money, and gold is money. The comment I want to make is, you have to ask yourself why. Why is it that the metals themselves are more heavily shorted than anything else? And I think it's a very simple answer, and it's something we've talked about for years and years, is that the reason gold, and I'm using gold and only gold right now, the reason gold has been suppressed for all these years, I mean, literally, go back to the 1960s, the London gold pool. There's been a concerted effort by Western governments to suppress the price of gold. And the simple reason is gold is the anti-dollar. Gold is the #1 direct competitor to the dollar. I mean, if we were talking right now and gold was $24,000 an ounce instead of $2,400 an ounce, that would be indicative of a collapse in confidence. So what they've done is they've tried to prop the dollar up by knocking the crap out of gold, whenever they get a chance with paper, so that they can point at the price of gold and see, gold bad, dollar good. Now, why is silver more heavily suppressed than gold? and Andy touched on it, because it's such a minuscule market. I mean, total global production, even at today's prices, only amounts to about $20 billion a year. And I mean, you got individuals now that could drop $20 billion out of their pocket and not miss it. So it's an absolute minuscule market. But if you saw silver run to 50 bucks, 75 bucks, 100 bucks, 200, 300, 500, if you saw silver blowing out to the upside, that's going to drag gold along. That's going to light a fire under gold and thus destroy confidence in fiat currency. So the reason silver is the biggest redheaded stepchild in the history of financial markets is because it is the fuse to light gold on fire, and gold is kryptonite to Western fiat currencies.
Last words of advice here. It appears that everything is vectoring on this big crescendo, whether you're looking at the political stuff or the financial stuff. A lot of there's a lot of change happening at the same time, and the rate of change is also accelerating. And some people are a little bit nervous and antsy about that. What would be your advice here on how to traverse these times? Let's start with you, Andy.
Tread carefully. Pay yourself first, as I've always been saying. And I think it's never been more important to own gold and silver. They are not an investment. They are wealth. And if you are not a contrarian right now, you're damn well bound to be a victim when this thing breaks. So I tell people to buy gold and silver, not to get wealthy, but because it is wealth. And that would be my advice right now. I just think that if you're all in dollars when this thing goes nuts, especially when you have a common settlement currency that is gaining momentum, it starts out slowly and moves quickly. I don't know, man. I think, as the Chinese curse says, may you live in interesting times. These are the most interesting of our lives. I have an uneasy feeling about what's in store for us one way or the other. So tread lightly, I guess.
My advice, I mean, it is what it's been. Just do the best you can to prepare and do it as quickly as possible, because time is running out. I mean, bottom line is, I can pretty much say this is no longer my opinion. It's pure math. The whole shithouse is going to come down. And the only problem is society today is not the polite society it was back during the Great Depression. Back then you had neighbors helping neighbors, and today you're going to have neighbors picking at fallen neighbors like vultures. That's just a function of society. So protect yourself, because no one else is going to do it for you.